Good morning and welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. During the live session, we will be running a poll, so please do engage with it and I'll reveal the results at the end. Good morning once again. My name is Kamran Shaikh and I'm the founder and managing partner of Morgan Reach. My overall responsibility is for the firm's strategy and delivery of services to clients, ensuring the highest standards of work are attained in all areas of the firm's operations. I qualified as a chartered certified accountant in 2003 and also hold a PhD in business studies. As a senior member of the team, I've developed long-term relationships with clients operating in diverse areas of business as individuals and companies alike. I work very closely with corporate clients in an advisory capacity and ensure that key strategic and tax planning is at the core of the services provided. Relevant to exactly the experience aforementioned, today's topic is quite pertinent and it's important for businesses post-pandemic. And the topic today is growing your business. When we're looking at a business, this is one of the most important questions that are asked currently by our clients who've gone through a lot of restructuring, a lot of management and a business review of where they stood pre-pandemic and where they stand post-pandemic. A lot of businesses have had to reinvent themselves to see where they were before, what they had to do to survive and what they need to do to grow going forward. And a lot of clients where the focus was more on historic accounts and reporting are now looking at trying to get further information on how they can utilize best what they've got in place, what they need to put in place, and what can they do to help grow their business to make it sustainable long term. It's not a small feat and it's not one size fits all. And there are several strategies available to businesses to look at. But there are some key factors of some easy wins that we can look at very, very quickly and see if we can put them in place to ensure our business starts to go in the right direction. A few things to note before we say this. Like I said, it's not one size fits all. And when people are looking at growing their business, each business has its own little niche. Each business has its own little area, which if they're in hospitality, if they're in retail, if they're in any other business, in consulting, in manufacturing. And we might say that generally there isn't exactly one strategy across the board, but there is one that is quite common that we discuss with our clients. And I believe it's very, very important. And it's one that could be implemented and put in place pretty easy. And it's all about getting your ducks in a row, crossing the T's and dotting the I's. How do I start? We can say, let's start with the basics. It's all about building blocks. It's all about the foundation. It's all about building on the foundation and taking it to the next level and grow the business as it needs to. But before we grow a business, it needs a sound platform. For that platform, you already have a business. And a lot of businesses and business owners come and turn around and say, well, I already have an existing business. So what do you mean by building a platform? It's very, very simple. When I say get the basics right, it's you need to understand as a business owner where your business is today. Where is it at? What's it doing? Where is it going? What's your current profitability? What's your cash flow? How do you use software? And how do you look at the numbers which are historic? And how do you look at the numbers going forward? This could be done in collaboration with a variety of things. It could be done by you working with your accountant. It could be done with you working with your in-house bookkeepers. It could be done at you looking at reviewing the business internally and then having a better understanding of where your business needs to go in the future. So let's talk about a few things first of all. How do I realize where is my business at the moment in time? We've got to be quite practical. We've got to be realistic. I know we all have our own businesses and it's our baby. It's our largest investment. For some, it's like your children and it's very close to our heart. We don't like criticism. We don't like people to come across and tell us what's wrong with it. But when we're looking at the growth of a business, when we're looking to run the business and sustain it long term, we need to look at where it really is at. So we have to be really, really realistic. And that could be really difficult at times. So first thing is get an advisor who you can talk to. Like I said, it could be accountant, it could be your in-house bookkeeper, it could be one of the colleagues within the business, a co-director, a co-partner, and realistically look at the numbers where you're at. Now, once you've looked at your numbers, look at the profitability of your business. One of the key factors people forget is when you're in a business, maybe you're offering a lot of services, maybe you're producing a lot of products. It could be manufacturing, it could be service-based. And people forget that we like to offer a lot of things because we think if we offer a variety of services and quite a few products, that is the win where the business is, because we've, in essence, diversified. That's probably not the best thing in all honesty, because sometimes when you're stretching yourself thin across several services and products, that could be detrimental because you're not focusing on something that could be your niche. That's what we need to do. We need to look at where the business niche are. What is the service that is niche to us? What is the product that is niche to us? And what market does it have? What share does it have? What product is the best seller? And what product is the one that makes us the most margin, the most money? Once we understand that, it becomes a lot easier for us to say, well, I have 10 products I'm producing, and only 1 or 2 of them are the ones that have got huge demand in the market, or there is a niche that I can develop and they have better margins for me. You then now to bring in the concept of building a strategy around it. You build a strategy around having that product and focusing on that product. Start to allay away all the concerns about other products that we were running in the past. Do we need to run with them? Or the services we were offering in the past, do we need to do that? For us to grow, those can stay in tandem to your niche strategic product. But you then need to develop that, because the more margin you can gain from offering this product or service more out to the customers, the more you would get profitability at the bottom line. And that's what it's all about. Because in the words of a great man, turnover is vanity and profit is sanity. The next bit, which is very important, is you build a pipeline. You build a process-driven system, a step-to-step guide, if want of a better word. So start delegating. You start producing a step-by-step guide of how this service can be offered or how this product could be manufactured. And then you start to use that as a conveyor belt of sorts. And you make it a process-driven, a system-driven, in which case, at this point in time, as the entrepreneur, as the leader, you're probably the person offering these services, or you're the person who's in charge of making sure the products are done and the quality control. Start delegating. Start leveraging other people's time. Bring a fantastic team around you. Build that team. Once you've got that team, you can have it at all levels. You can use that team by it using software, using processes, it using various tools that are available in the market at its disposal, and making sure they then use that to start delivering that service or manufacturing that product. It's fantastic to look at it. And when you start to delegate and you get the right people involved, and trust me, there's a lot of good people out there you can recruit, they can come in and, dare I say, do a better job than the entrepreneur themselves in terms of helping to grow that business, helping to grow that product delivery or a product or a service delivery, and ensure that it is now scalable, rather than you being the single point of failure or the bottleneck, where you're providing a niche service. You can now have your staff do the runaround, the legwork, and build that platform where you'd be in a position that you are there to review and discuss with the clients, scaling up the service that you weren't able to offer, say, for example, to 10 customers a month, whereas you're only doing it for 1, you can now do it to 10, maybe more if you were to be able to do a clone. It's all about the execution and the implementation in the end. And as long as you've got the ecosystem that's produced, maybe using software, maybe using technology, tools, other processes that you can find which are world-class within your industry. As long as they're there, you can now focus on providing the right service at the right price to a larger market, scaling it up, ensuring you focus on reaching the goals of getting the bigger clients, the larger clients, increasing the revenues, and in this case, bringing and making sure there's profitability in the business, creating growth. Now, I do say that this is not the only way. There's several ways of looking at it, but this is one of the ones that we've seen is what entrepreneurs miss. It's the easiest one to look at, and it's the easiest one to miss. We've got several questions that are coming in, and they're queuing up. So let me start by taking the first question. We've got Jake on Facebook Messenger. Jake's asking, I've started a takeaway business with 2 mates. That's always a good chance doing it, and want to take my dividends each month, but they all want to wait until the end of the financial year. What would you recommend? Does it make a difference in tax rates if we take monthly versus annually? This is, I think, one of the questions that is on every startup's mind. When people have started, they've got together, they start a business. And generally it happens with mates. And you're looking at several things. You're looking at, right, how do I offer the service at the right price to customers? Then you all get together, you have an idea, you have a business, you want to run the business, you want to make most out of it. But most importantly, this is now your main business. This is where your money's coming. And Jake's rightly asked the question of, well, can I take dividends monthly or annually? And does it have an impact on the tax rates? So there's quite a few things in here to discuss, but I'll touch on the points that Jake's asked first. First things first, does it have an impact on the tax rates? Absolutely not. So your tax rate for corporation tax would remain the same. What would be if your profit was whatever at the end of the year? So that tax rate would not be affected. With regards to your personal taxation, and this is very important to know. Now, personal taxation for dividends works slightly differently. Whereas in a corporation or a limited company or an LLP or an incorporated company and organization, the tax rate's currently at 19%, with talks of it going to 25% for businesses earning more than £50,000 in profit in the future. However, for personal tax, it works slightly differently. For personal tax, it really is dependent on your personal circumstances and personal income. For example, it's you and 2 of your mates, your 3 mates. And if your only income is from the business, I'm sure your accountants would have advised you to go and put yourselves on a salary, a basic salary. Say, a lot of accountants come up with whatever the tax free personal allowance for the year is, so £12,500 approximately. So all of you would be on £12,500 approximately, because all 3 of you are working in the takeaway. Now comes the question of the dividends. Once you've got the £1,000 or so a month that's coming into your bank, you might go, well, actually, I need a bit more than that. I need more. Now, if all of you are shareholders of the business and all of you are equal shareholders of the business, what would happen is if one of you took, say, £100 a month, then the other 2 would also be taking £100 a month, which means you are all taking 1,200. On the personal taxation, there's a couple of bands you need to be considering. The first £2,000 of your dividends are tax-free. So all the dividends that you take in the year from your company, the first £2,000 for all 3 of you would be tax-free. Then comes the secondary band, which is the basic rate, as we call it. So people who are on a basic rate of tax, which is if their income's up to £50,000 approximately, including their personal allowance, they would pay a further 7.5% on the dividends. Don't forget, you've already paid 19% on corporation tax, and whatever is left of that, what you've declared to yourself as dividends, you would pay a further 7.5%. For argument's sake, Jake, you've got a friend, Tom, and you've got a friend, Adam. You and Tom are only taking income from the business, whereas Adam's been lucky enough to be passed on a property from their father or their mother. And this property yields them a rental income. Now, suddenly, Adam's income's gone over the basic rate threshold. In that case, Adam would pay up 32.5% on the dividends rather than 7.5% on the drawings of the dividends beyond the basic rate. So I think that's the sort of things you need to be aware of. Making sure the dividends are taken equal tranches, also making sure that all of you are looking at your own personal tax planning, which I'm sure you can discuss with your accountants. A lot of people take dividends on a monthly basis because they say the business is making money and you're using that cash flow to fund your personal expenses. It does come with a pinch of salt to think about. There's the point you've got to think about, and the point is your business might be making fantastic profits in the first 9 months of the year, and then suddenly in the last 3 months of the year it might be breaking even. God forbid we have another situation where we have a lockdown or a pandemic situation. What would happen in that case? Well, in that case, the business would stop making any money. If it stops making any money, and if it goes into negative, you are already now used to drawing that sort of money on a monthly basis because the business has been sustaining the drawings on a regular basis for 9 months. And now all three of you are used to it. When it comes to month 10 and you have a loss, maybe you have to put some money back in to make sure the cash flow keeps running. How would you guys deal with it? That's an important factor to look at, because it's not just about drawing the money, it's about the long-term strategy of the business. And again, business growth, business development, it's always advisable to keep a buffer, a bit of a cash flow, a working capital, as we call it, within the business to ensure it's there enough to pay for bills for a couple of 3 months, just in case you start to doing a break even rather than a profitable monthly profits. I hope that explains the question. We've got further questions coming in. We've got Sheridan on Twitter. And Sheridan's asking, within QuickBooks, can I have a customer who is also a supplier? If yes, how do I set them up? This is a beautiful question. It's one of those little quirks on QuickBooks. And just to give everybody an idea, if there is any problems with QuickBooks, or if you have any technical advice that you need from QuickBooks, by all means, speak to their helpline. They're absolutely fantastic. They're very helpful, very professional, very knowledgeable. But I do believe that a lot of accountants that are using QuickBooks, who are partners with QuickBooks, are your accountants and helping you work your QuickBooks online monthly account. They can also answer this question. So coming back to the question, it's very simple. Sheridan, you've got a customer and a supplier, and let's say the customer's called XYZ Limited with Limited, and they're a customer. What you would do is they were a customer primarily and a supplier secondary. You'd go into your customers, you'd create a customer called XYZ Limited with a full Limited. Fantastic, it's done. When you go into suppliers and you try to do the same thing, it won't let you do it. And it will go, but you can't do it because you've already got them in the system. And that's, like I said, one of the quirks of QuickBooks. So what we do say to the customers is very simple to our clients. When you have a situation like this, just add a full stop at the end of it. Just say XYZ Limited and a full stop, a dot. What that does, it creates a unique entry within the database at QuickBooks. So the system then recognizes, yes, we have a customer and we have a supplier, albeit one with a dot and one without. I hope that answers your question. But like I said, if you have any queries, if you have any other questions relating to the software, please feel free to ring up the helpline. They're fantastically helpful. We have another question from Roshan on Instagram. And Roshan's asking that he has a PayPal deposit entry in my PayPal balance sheet account, but no corresponding deposit in the PayPal feeder account. How do I account for this? Right, it's more of a bookkeeping question, Roshan, and maybe if you have a chat with the helpline at QuickBooks, they might be able to suggest how that entry has landed up in your PayPal balance sheet and not in your PayPal bank feed. Sometimes what happens, and this is not looking at the detail of the transaction itself, but sometimes what happens is when you link up your PayPal, what the PayPal would do is it would bring in, want of a better word, an opening balance from PayPal into your QuickBooks. And it could be as simple as that, because it's brought it in and it's got the information in the balance sheet for PayPal. And the other side of it, I'm presuming, would have gone to the profit and loss reserve account. So if you click on that transaction for PayPal, you will see if it's gone to the reserve account. And if it's to do with an opening balance, it might be simpler for you just to delete that particular transaction because it's not to do with the transaction listing. that is going on in PayPal, which is what you really are looking for when you're reconciling your PayPal. But by all means, because I don't know the exact transaction and I can't see what that particular line's showing up, it might be a good idea just to speak to the help desk at QuickBooks, and they should be able to support you on that. But I'd say 8 out of 10 times, it's when you link the PayPal bank feed, it normally brings in opening balances, and that could be an easily resolvable issue. We've got a further question, which I'm going to take. It's a question from Aurelia on Facebook Messenger. Aurelia's question is, I have the accounts for a franchise, but each of the branches have really different cash flow. One venue has peaks and lows in any given month. Another venue, the daily cash tips paid out tend to exceed cash receipts brought in. How do I balance these different flows and bring if I could get my words right, bring consistency across all? Right, okay. So that's a very good question. And what you're asking is very, very important when you're looking at consolidating, when you're looking at several sites, when you're looking at a business with multiple sites. And different people do it differently. I mean, different bookkeeping and accountancy firms do it differently. But if you've got the different sites as different limited companies in that franchise, what could be a good idea is if they all have different licenses for QuickBooks. For example, if there's one in Manchester, the other one in Birmingham, another one in London, another one in Edinburgh, what would be a good idea is you'd go, right, here's all the several branches or the several franchises, they have their own QuickBooks licenses. When they have their own QuickBooks licenses, what you could do really well is you could make sure the chart of accounts for all of them is exactly the same. If the chart of accounts is the same, what would happen is when you're looking to analyze the data across all of them to consolidate it together, the information that's there, the transactions that are there, the nominals that are there would feed in quite nicely into one group structure. Some of the things that when people are consolidating accounts across franchises into one reporting on a monthly or a quarterly basis, is they forget that there are sometimes cross-franchise invoicing within that group structure or within that several franchises that you got from a franchisor as an entrepreneur. So it might be a good idea to have a line which is a line to say intercompany invoicing or sorts. So when you consolidate everything, those invoicing and those supplier invoices will just match off to nil, giving you a much accurate figure of what the actual franchise is doing in terms of business. When you're looking at the cash tips paid out and cash receipts which are brought in, and you're saying one outweighs the other, you're looking at negative cash flow. Again, when you're reconciling all the transactions, what a lot of people do is they're very good at using the bank feeds and reconciling the bank, but we don't use the reconciling functionality within the cash book within QuickBooks. Now, a lot of people say to me, oh, it doesn't really have a cash book. Actually, it does, because all you're doing is the petty cash is already linking in to the banking area within QuickBooks. So you could download the transactions, upload them into QuickBooks rather than doing them manually one by one. If you're doing it by Excel, you can import it all across into QuickBooks. The advantage that gives you is you've got absolute breakdown at a transaction level within QuickBooks, hence helping you create a cash book. So if you have overs, so if you have more money within your cash in that particular day, it will show up as a cash balance within there, which goes into your safe. And the following day, when the cash receipts are less and the cash paid out is more, then it will automatically reconcile that, giving you a true cash figure in real time. And I do believe the software is absolutely brilliant for this. So please do use the functionalities, and that would really help you. As long as you don't have multi-currency, you can have cash flow, and it could really give you a good idea, because QuickBooks now also has a cash flow functionality, which gives you a really good idea where the cash is, whether it's through banking, whether it's through direct debit, it's through credit cards, or it's through petty cash functionality. So we've got more questions coming in. Love it, absolutely love it. We have another question that's coming from Shay on Twitter. And Shay's asking, can you explain how we can record deductions suffered under CIS if I have moved from another payroll software? This is, when we're moving through software, people do have this issue that we've used one bit of software and really proficient on it, but we start using another bit of software for better reasons. For example, Shay's obviously using QuickBooks now to ensure he's got the consolidation within the one software. Now, that brings a lot of efficiencies internally, but rightly so, you have to understand, you have to know how to use it, because if you have the tools, if you don't know how to use them, they're no good to you. So what I would suggest, Shay, is in this case, rather than me going into a lot of detail behind it, might be a good idea to pick up the phone call to our helpline at QuickBooks, speak to them, and they would talk you through how to use the software, how to use the CIS functionality, and they should be able to get you to understand it better. Maybe do an online training session. We've got loads of training videos available on YouTube. You've got, you can book a training session to go through just your CIS bits. So there are quite a lot of things you can do, and they could be quite helpful. I know I said we've got a poll running today, and there's lots of people who've come back and they've participated in it, and I can see the answers are coming thick and fast, and more and more and more. But when I'm looking at it, it was a question just to let people think outside the box, to say where they are, what they need to achieve. And the question that we had on the poll was a very important question, and I'm really happy that there's lots of answers coming in. So I will come to that in a couple of minutes. I'm going to take one last question from Safa on Instagram before I come to the poll. Safa's question is, at my beauty business, we just started offering treatment packages like 6 sessions of facials, which are paid for upfront. I'm unsure the best way to account for these. Don't want to have empty invoices for free sessions. So this is a very good question, Safa. A lot of businesses who are taking money in advance ask these questions. A lot of businesses who are offering services as package deals are asking these questions. A lot of times when you're looking at these upfront payments for these deals, what might be a good idea is to create a suspense account or a control account on your QuickBooks, which records all the transactions for all of these upfront payments. And as long as you declare them as deposits, you would then know what deposits there are from people for services you can offer them in the future. And that also ensures that you're constantly on top of what revenue you've actually earned and what revenue you will be earning based on what services you provide to customers. I'd say speak to your accountant, and they should be able to set up something for you as a process flow so you can manage it. And that will be really good for your business. It's a very good question. A lot of businesses are affected by it. And there's another question that comes out of it in terms of packaging, of how do I look at the margins of these things? But please speak to your accountants, and they'd be able to set something up within your system in collaboration with yourself to look at the deposits not to be declared as revenue until you've offered the service, and also how you can measure your margins. I think that's all the questions I will take today. We've got the results in from our poll, and I'm actually quite surprised at the results. And the question was, who do you speak to for business growth advice? 80% of people have said your accountant. 0% of the people said your business coach. 20% of the people said your friends and family, and everybody knew an answer. So nobody said, I don't know. So that's very conclusive that you should speak to your accountant. That is surprising, because I would have thought people would have said, I'll speak to my friend or I'll speak to a business coach. But I think the right answer is actually you need to speak to your accountants, because your accountants are sometimes niche accountants for your industry, and they know exactly the ins and outs of what you're dealing with on a day-to-day basis, and they can come across, they can build a strategy, they can give you value-added advice, and in that piece, they can help your business grow with you at the helm of it, providing you the right support giving you the idea of the right tools behind the scenes to ensure your business is successful. Because don't forget, if your business is successful, the accountant's business is successful because they're working alongside you and your growth is their growth. That's at least how we see it at our firm. It's been an absolutely fantastic session this morning. I absolutely love the questions that are coming in. Like I said, I was surprised at the poll and it's been all relevant. So thank you all for tuning in. If you want to get into contact with us, you can email us on quickbooks@morganreach.com or visit our website at www.morganreach.com. Coming up on Ask the Expert tomorrow is author, speaker, and impact coach, Esther Stanhope. Tune in to learn how to become a thought leader and how to attract more business through it. A fantastic idea. A reminder that if you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. I've really enjoyed answering your questions this morning. Have a great day and see you guys soon.